I mean, silver bugs can hate me for my divergent thesis and call me Darth Silver, but I'm actually extremely bullish on silver going forward because I think of it as a win-win metal. If we're right about the debasement of the currencies, long and variable lags, all this stuff eventually be good for monetary metals, I think that's still good for silver. And if at the same time, after the recession, we have all this, green agenda and everything pushing silver demand through the roof, it has the best of both worlds there.
We're already seeing a tightening silver supply. While silver demand set records in every category in 2022, supply was flat with mine output falling by 0.6%. This resulted in a 237.7 million ounce market deficit in 2022. Lobo Tiggre, the visionary founder and CEO of Lewis James LLC, is at the forefront of insightful perspectives in the field. In this video, Tiggre is optimistic about silver's future, foreseeing increased interest due to currency debasement and a post-recession demand. A recession can in no way be considered a sure indicator of an impending price rise for silver. It can take a few years for the rise to begin, as happened with the recession of 2008, in which the price only peaked in 2011. Tiggre, cautious about silver's mixed industrial and monetary roles, envisions gold-silver ratio shift due to changing supply-demand dynamics. Silver consumption is expected to rise with solar to constitute 14% of this year's demand, up from 5% in 2014, while China to surpass U.S. panel installations in 2023. We can see the growing spread between silver and gold in the silver-gold ratio, currently running at over 84:1. That means it takes over 84 ounces of silver to buy 1 ounce of gold. To put the current ratio into perspective, the average in the modern era has been between 40:1 and 50:1. Tiggre states that if gold prices dip due to Team Soft Landing's victory, it could be an opportune moment to buy. Gold futures based on the most active contracts posted a gain of nearly 5.7% for the first half of 2023, but they lost 2.9% in the second quarter, according to Dow Jones market data. Meanwhile, Tiggre also predicts that future gold standard with digital tokens, replacing silver and copper for change. Now we are presenting you the glimpses of Lobo Tiggre insights from his recent interview with David Lin. Before we continue to delve into this discussion, we request you to subscribe to our channel and activate the bell icon for timely updates.
If Team Soft Landing's victory puts gold on sale, I would absolutely see that as a buying opportunity because I do think those long and variable lags will be wrong. Like it's an apparent victory. It will be a false signal. So if gold breaks down below 1900 to 1800 or maybe even lower, at that point, like right now, I don't want to buy because that's a threat in the immediate future. But if that hits, then I think that will be a spectacular opportunity. I would be looking to deploy a lot into the gold space. Now, sadly, I have to say that silver, I would hesitate because it's also got its industrial side. And we have seen over the last year an increasing divergence. And there's a lot of people that are expecting that divergence to close. They think the gold-silver ratio at near historic levels, it's got to go back. I don't think it does. Now, that doesn't mean I'm saying silver has to go down. I'm saying that the gold-silver ratio, if the use case for silver has changed, it does not have to go back to its historic norms. In fact, it shouldn't. If the supply and demand for these two different metals is now different from what it was before, then the balance or the ratio should not be the same. It should find a new gold-silver ratio going forward. So, and I'm not smart enough to tell you what that's going to be, David. And I wouldn't believe anybody who said they were. I'm just going to have to watch it. If I'm right about the recession, if I'm right about the Fed breaking something and the recession coming and becoming undeniable by the end of this year, if gold and silver move together, then I'll feel much better about piling into silver. I'll buy gold first, and then if silver follows, then I'll buy more silver. If not, then I'll wait for the recession to be done and buy silver when I start buying copper and oil and other things. There is some fear that the more efficient panels, they use less silver, but still the use of panels writ large is exploding. So if the deployment of solar panels increases tenfold over the next 5 years, and those panels use half as much silver, you're still looking at 5x more silver consumed that way. let's say there was a new gold standard implemented in the future, big panic, everything. Nobody trusts paper money anymore. We got to have something physical, or Bitcoin. That's not physical either. So let's say there's a new gold standard. Well, I'm not sure that we would see silver or copper either. Remember, we had gold, silver, and copper. We had a tri-metallic standard in the United States before, because you used pennies to make change for silver. You used silver to make change for gold. An ounce of gold was just too much money for most of your day-to-day. You wouldn't go down to this local supermarket with a double eagle to pay for a loaf of bread and a gallon of milk. But in the day of digital tokens, blockchain solves that. So I think that the case can be made. Nobody's going to want to go around with like a medieval gold purse jangling at their belt, right? Nobody's going to want to do that. In today's world, I think gold, if it gets recirculated as money, it stays in the vaults, trusted vaults, banks, whoever you trust. And it's the digital ownership that gets transferred. In that world where I can transfer 1/100,000th of a gram of gold, I don't need silver or copper to make change. When you say the market, who's the market? It's not you or me going down to the local coin shop to buy some beautiful gold buffaloes, right? That's COMEX traders, LME traders. They're not buying this BRICS gold-backed currency. You can see that there is no correspondence to the futures trades and BRICS gold currency news at all. So those so-called professional traders, this isn't on their radar at all. It's just noise.
For months, economists predicted the Federal Reserve's rate hikes to fight price inflation would spin the U.S. economy into a recession. But there is a growing consensus that the central bank can slay price inflation while guiding the economy to a soft landing. During the interview, Lobo Tiggre gives an unexpected bearish view on short-term gold, citing Team Soft Landing correctness. Growing worries that the Federal Reserve, in its bid to fight inflation, will keep interest rates aggressively elevated longer than expected is taking a significant toll on gold as prices end the week near a 5-month low. Meanwhile, Tiggre points to higher rates favoring interest-bearing assets, while decreasing gold demand in a safe landing setting, causing market uncertainty. Gold gained on Friday as the dollar and bond yields eased, but remained on course for a third straight weekly dip as strong U.S. economic data reinforced bets that the Federal Reserve will keep interest rates elevated. Let's get back to interview.
I've actually been making a bear case for gold in the near term. Believe it or not, gold bug that I am. I'm not a permabull. And I've said that if you have a circumstance where Team Soft Landing appears to be right, but mainstream finance catches on to higher for longer, that's very bearish for gold, because gold doesn't pay interest, right? So if you've got higher rates, you're competing against, the so-called no-risk asset of bonds that are paying very high coupons, or giving you an excellent coupon. But at the same time, soft landing means there's no fear. So you don't need no safe haven assets, right? So where's the market for gold in that environment? While Team Soft Landing appears to be victorious, I think that's very bad for gold. I think we could see dramatic moves lower in gold, especially if it breaks below psychologically important variables or technical floors or so on. You could easily see it break under 1900 and go straight down to 1800 or maybe even lower, depending on what gets triggered there. So big moves if Team Soft Landing appears right. On the other hand, if the next regional bank crisis or gilt crisis or whatever the next thing that breaks du jour is, causes the fear to come back, you could see gold take off in the opposite direction. So I'm not sure how helpful I'm being, David. I'm not saying, here's my prediction, gold's taking off, buy. Or not saying, here's my prediction, gold's tanking, sell. I'm saying it could go either way. And if that's not helpful, then at least I hope people will realize it's honest. I don't think anybody really knows right now. If Team Soft Landing wins, it means the economy seems fine. Well, why would the Fed cut rates? Everybody's been assuming, everybody on Wall Street, or the plurality of investors have been assuming that as soon as the hiking cycle stops, pause a little bit, not long, but then we start cutting because the rates don't need to be that high. But if we really have this soft landing, we didn't get the expected weakening. Remember, the Fed itself was projecting increases in unemployment far larger than we've seen so far. If that doesn't happen, why would they cut? And people are starting, like I'm hearing this in the chatter of the talking heads on financial media this week. Like people are starting to realize, well, wait a minute, this soft landing has a dark lining here. Higher for longer, suddenly people are starting to believe that the Fed may really actually do that. So why that's bearish for gold, and I'm not just talking gold here, but on this question, why that's bearish for gold is because high real rates are always negative for gold. That's a very strong relationship. High nominal rates turn out, we've discussed this before, to have a negative impact on gold prices. And what supports it is the fear factor. If you have that safe haven demand, then that's good. But if you have a soft landing, there's no safe haven demand. People aren't worried. The people who were saying a month or two ago or after the regional bank crisis, those people were saying, maybe I'll just buy a little bit of gold as a hedge here. Now, I'm scared. Banks are going up, belly up. This is scary. I'm going to buy a little bit of that. Goes out the window, David. That whole source of demand goes out the window. Now, maybe central bank buying by BRICS countries saves us, but maybe not. That's not a trend that anybody can bet on, I think.
Looking ahead, the precious metals landscape, especially silver and gold, is in flux. The concept of a soft landing poses challenges, with silver's dual role and gold's response to economic scenarios. How will these shifts influence your investment strategies on these metals? Share your thoughts in the comment section below. If you find this video informative, don't forget to show your support towards our channel by giving this video a thumbs up and subscribe to our channel, and turn on notifications to stay informed about our latest videos covering more interesting topics. Thank you for watching.